If you're just a beginner investor, this is the perfect video for you. This is the only video you're going to want to watch to pick a strategy. So today I'm going to be sharing with you how I invest my money, and I call it the timeless investment strategy. Let's go. Hey guys, welcome back to the channel. My name is Michael and I'm an accountant from Australia. So in this video, I just wanted to quickly break down how I go about my investment strategy. Earlier this year, I released this video, which was all about my 2021 investment strategy. And in that video, I mentioned the timeless investment strategy. So I just wanted to quickly break that down and show you what it actually means. This video is going to be broken down into 4 parts. The first part will be talking about what is my goal of investing? What am I actually trying to achieve? And what am I trying to get out of this? Because at the end of the day, what's the point of doing all this extra research and education if it means nothing? So I'm going to be sharing with you why I invest and what my financial goals are. And in the second part of the video, I'm actually going to share with you what is the timeless investment strategy. There's just 9 simple words that you need to remember. In the third part, I'm going to be sharing what my asset allocation is. This is a massive part about investing, and this is what lots of people talk about, so I'm going to quickly break that down in this part of the video. And lastly, I'm going to share how you can actually do the timeless investment strategy very simply, very easily, and just through a couple of websites that you probably already are familiar with. So let's get started with the first part. What are the goals of investing? So obviously lots of people have lots of different goals when it comes to why they invest, why they pick stocks, and all these sorts of things. What actually matters to them? For me, I invest because I want to reach financial independence. And I see financial independence as 2 different levels. The first stage of financial independence is being independent from a job, from a boss, from a day-to-day job, being independent from mum or dad or a spouse, so that you can actually fund your own lifestyle by working for yourself. So this would mean starting a side hustle, starting a business, or becoming a freelancer to earn income for yourself. And the second stage of financial independence is being able to fund your ideal lifestyle by not working at all. So that means that your investment income covers the cost of living, so you can go on to fulfill your other dreams without having to worry about the income. This is where lots of people get confused about financial independence. For me, this isn't about retiring from the 9 to 5 and sipping margaritas on the beach. This is about having the time and capacity to go out there and fulfill my life purpose. So to be able to reach the second stage of financial independence, you need to accumulate enough assets so that these assets return income that funds your expenses. This income is going to come in no matter how the market performs, no matter if I lose my mind, if I lose my motor skills, or even if I die. This is truly financial independence where the income is going to come in no matter what happens. And that brings us to the second stage of the video. What is the timeless investment strategy? And what does it even mean? For me, I don't want to be in the books of every single business, reading through financial reports, reading through filings and all these things, just to get an idea of whether or not a particular company is a good investment. I'd rather spend my time on more inspiring projects like filming YouTube videos and let the investments run themselves. Now, I've learned some of these strategies from some mentors, one of which being Lewis Mocker through his School of Mastery program, which I have linked below. I highly recommend you check that out. The timeless investment strategy is all about thinking over the long term. The timeless investment strategy is all about avoiding entropy. What is entropy? Entropy is the deterioration of things over time due to neglect. So for example, keeping in the investment analogies, if you think about a real estate property, a single family home that you purchase, you go out and you pay money to buy this home, and in 20 years time, the roof's caved in, bricks are falling, and you need to repaint it. This is the sun causing damage to the property, the earth's shifting and causing the building to deteriorate. This is entropy. The Google definition of entropy is a gradual decline into disorder. So by neglecting your real estate property, you're gonna have to put money into it to keep it looking nice, it's naturally declining into disorder. It's getting worse, it's deteriorating over time. So the timeless investment strategy is all about neg entropy, where things get better over time, they don't deteriorate, they improve themselves every year. So what am I talking about? The stock market. But how does the stock market achieve neg entropy? Well, if you think about an index fund such as the S&P 500, there's a ranking of stocks from number 1 to number 500. There is a worse stock in that top 500. If a company in this ranking of the top 500 stocks fails to innovate and fails to be profitable, that's naturally going to fall out of the top 500 stocks and be replaced by a different company that's more profitable, has better management, is more innovative, and maybe has more potential to grow. So this is a natural occurring phenomenon that happens with the S&P 500. If you're underperforming, you're going to get out of the S&P 500. And if you're a good company and you're showing potential, you're going to be put into the 500. Tesla was only put in the last 12 months, and it's grown so much that it has to be put in the 500 because it's one of the largest companies in the world. I'm sure it replaced a stock in the 500 for a company that was much less innovative. So by actually investing in index funds, you're basically betting on the human race. You're betting that we're going to become more productive, more efficient, more profitable, and more innovative over a long period of time. We're going to invent things. We're going to change how things are done. We're going to do it better than how we did it in the past. So let me actually share the strategy now. All you need to know are 9 simple words. Buy the market monthly via low-cost index funds. I'll say it again. Buy the market monthly via low-cost index funds. Get this tattooed on your face. Well, maybe not your face, you can't see it. Get it tattooed on both your hands. Remember this thing. This is important. This is the strategy to a nail. And let's just quickly break that down. So buy means, obviously buy means we are long-term bullish the stock market. It will go up over long periods of time. In fact, over a 30-year period, it has never lost money. In fact, history shows over a 30-year time frame, the stock market has always gone up. Over 30 years, it's never lost. So you'd be foolish to not be buying. The market. We don't want to be fooling around with trying to pick stocks. We just want to buy everything as a whole and get in there. That's the easiest way to do it. Monthly. This is all about time diversification and dollar cost averaging, which we'll touch on in a bit. Via low cost index funds. Low cost means that we don't want to be paying a lot, maximum 1% per year, and index funds is just covering the market. Same thing. The timeless investment strategy is so great because you're buying into the world's biggest markets, with the world's biggest businesses, with the world's best systems run by the world's best managers. It's a no-brainer. The third part of this video is all about asset allocation. And this is where we're going to talk about index funds and why they're so great. Now, of course, everyone has heard about index funds and ETFs. An index fund is just a type of ETF that you can buy. You can also buy a mutual fund, but an index fund is just a fund that you can buy on any sort of brokerage, and it's going to track the market exactly how it does. So if you see on the news that the market went up by 5 points today, your index funds would have also gone up by 5 points. Likewise, if the news says the market went down by 5 points, your index funds would have also gone down by 5 points. There's no disparity between the two there. Another benefit for buying index funds is that they're naturally diversified. So you're diversified between companies, between sectors, between industries, between countries, between economies. So you're not just putting all your eggs in one basket, you're diversified across the whole market and you're pretty safe from that aspect. Now, what I personally do is that my platform is called My North. It was set up by my financial advisor, but I'm going to show you how you can do the exact same thing on your own through platforms you probably already have. I just have a bunch of index funds covering a couple of different things, and I can just put my deposit into North every month, and then North automatically disperses that between the different funds. This definitely isn't necessary and is maybe a little bit over the top, but I'm going to be showing you how you can do the exact same thing through any brokerage like CommSec, Vanguard, Investor, or Superhero. An index fund you might want to check out is called VDHG, and this stands for Vanguard Diversified High Growth. So this is a 90% stock, 10% bond split, which means that it's mostly growth and a little bit of conservative, a little bit of income based, and it's really diversified. You can buy this ETF through just about any brokerage, so just check if you can buy that on yours. I've left a link below to check out the website to that Vanguard ETF, so you can do a little bit of reading on your own and do a little bit of research to see whether or not that would be suitable to add to your portfolio. And the last part of the video is how do you actually do the timeless investment strategy? Well, all you have to do is buy the market monthly via low-cost index funds. I have set up automated bank transfers in my online banking account to automatically deposit a certain amount of money every single month on the first of the month into my North portfolio. So what that's doing is time diversification. I'm not just putting in a massive lump sum all at once. I'm putting in little chunks all the time so that it's continually growing and growing. So to set this up for yourself, what you need to do is figure out how you can deposit money into your brokerage and automatically buy the ETF that you want. So for me, through North, I just have to make a BPay payment from my online banking to my North portfolio, and North automatically sorts it out for me. But what you might need to do is go into your bank account and do an automated transfer every month into your CommSec portfolio, for example, and then you may have to manually go in and buy it. But the key here is to not miss a single month, See, I've fully automated it so I don't get emotional one month and decide not to do it. It just automatically happens behind the scenes, and then at the end of the year, I check in on my portfolio and I've seen that it's grown and it makes me feel happy and warm inside. Thank you so much for watching, guys. I hope you found this useful. The timeless investment strategy is a game changer when you learn and you put it into practice. I've been doing it for nearly 3 years now and I've seen my portfolio grow like crazy. So if you enjoyed this video, please check out my channel. I make lots of videos all about investing, taxes, and accounting. So if that's right up your alley, maybe even consider subscribing.